So hello everyone and welcome to the next session on preparation of financial statements. I hope the audio is clear. The screen is also clearly visible. Today we will start with a question on preparation of financial statements. We have already seen the format of financial statements. I have already explained to you various adjustments that you have to keep in mind. Today we will start with an illustration, and we will start with a very simple illustration without any adjustment. The idea is to get comfort on how to prepare financial statements for companies. Now, two things I want you to do. First, in your notebook, leave about 4 to 5 pages. Okay, 4 pages should be fine. And as and when I tell you that, okay, this point is important, or as and when you feel that this adjustment, I found it confusing, at that point of time, make your own list. That list will help you save time when you're revising. Okay, so when you are revising chapters like financial statements, consolidation, amalgamation, we should not be doing all the questions all over again. We should be careful about some typical adjustment which we faced difficulty during the class. That is the first thing. Second thing is, there are a lot of disclosure requirements. See, we saw format of balance sheet, we saw format of P&L, and there are a lot of disclosure requirements. What we will do is, as we solve the questions, we will take up some of the disclosure requirements relevant to the question, and towards the end, after we have done some substantial number of questions, that is when I will take you through the entire disclosure requirement. Even in the disclosure requirement, I will tell you, okay, these disclosures are typically tested in the examination. Other disclosures, you just be aware of it. Okay, because if we have to remember everything, it will actually be impossible. I hope all of you are geared up, and yes, you need to have a calculator. I prefer this calculator. Okay, if you have a Casio calculator, that is also fine. Whatever operations I'd be doing would be based on this, a Citizen City 100 series or Orpat OT series. I'll be using this calculator. All right, use only one type of calculator, don't change your calculators. And yes, some of you have this habit, right? Using mobile phone to calculate in the class. Please don't do that. You have to use the device that you will be using in the examination. And all of you, with your notebooks, as I am solving the questions, you solve the questions alongside me, or subsequently pause the video and then solve the question. We need to do it together, only then it will be possible. All right, so let's look at the first question. You are required to prepare balance sheet and statement of profit and loss from the following trial balance of Haria Chemicals for the year ended 31st March of year 1. So this is the profit and loss account year ending date and the balance sheet to be prepared on that date. That is a simple thing. Now they have given a trial balance. So you have the debit items on this side and you have the credit items on this side, and it is a tallied trial balance. Okay. Now, let us look at the item. In the first few questions, I will be reading through the items. I will also be referring to the amounts. But in the examination scenario, no need to refer to the amounts, because what is important is what are the items. Okay. And this being the first question, first I will read the full question and then we will again start the solution. But as we get comfortable in the class, by the time we are reading the questions, important items or known items, we will directly start plotting in the solution. Okay, so that is one thing we will do. One more thing, what I used to do is, whenever I have posted one item, say for example inventory, this inventory I have already considered in my P&L, I used to put a single small line like this, okay, small with a pencil. And wherever there are adjustment, see, now here they have said closing inventory. Now I told you any adjustment will appear twice in the solution. So here I would put a cross. First time in the P&L, second time in the balance sheet. So once I have done both the adjustment, I am clear that yes, I have considered everything. Okay. So let us see the question. Particulars, the first item is inventory. Now inventory, unless they mention otherwise, is assumed to be opening stock. Now as we read the question, in your mind, figure out where will this opening stock appear. In the P&L account, we have something called as changes in inventory. That is where we will consider. Okay. Then furniture. What is furniture? Furniture is an item of PPE. This will appear in the balance sheet. Okay. Of course, in this question, we don't have any further information on depreciation, but that also we need to check. Then discount. Now, if discount appears on the debit side, is it an income or an expense item? It is an expense item. So, this discount is my expense to be shown in the P&L. Now, in the P&L format, if you see, you have other expenses head, and this is where you will be showing all other expenses which don't fall in the other categories. Okay. Then loan to directors. Now, this loan to directors is a balance sheet item. And whenever there is a related party, okay, now these directors are related party. We learn this in Accounting Standard 18. We have to make a separate disclosure. Advertisement is our expense. Bad debts are also our expense. Commission expense. Materials consumed. Remember, in P&L account, there is a separate head for material consumed. We will plot it there. Then plant and machinery. This is again an item of PPE. Rentals, our expenses. Current account. This is an account with the bank. Cash, interest on bank loan, expense. Preliminary expenses. Now, please understand, as far as accounting standards are concerned, preliminary expenses cannot be shown as an asset in the balance sheet. You can make a note of this adjustment. Okay. Earlier, maybe in 11th or 12th standard, they would have taught you preliminary expenses not written off, shown in the balance sheet, something like that. Now, forget all of that. As per Accounting Standard 26 on intangible assets, preliminary expenses should not be shown in the balance sheet. It should be considered as an expense immediately. See, what income tax says is very different, but when it comes to accounting, this will always be shown as an expense. In your notebook, make this as an important item, or in the list of adjustment, note this down so that you don't get confused when you are appearing in the examination. Then fixtures. Fixtures are like, items which are fixed, let us say something like your electronic items or electronic equipments, or items related to furniture. Generally, we say furniture and fixtures. So, you have furniture, let us say something like a shelf. Those are fixtures. Wages are expenses. Now, no headache. Direct, indirect, all of them are expenses. Now, this wages expense is related to employee, so we will show it in employee benefit expenses. Consumables are also expense. Freehold land, this is our asset under property, plant and equipment. Tools and equipment, again asset. Goodwill, intangible asset. So we have a separate heading for property, plant and equipment, and we have a separate heading for intangible assets. Trade receivables are our debtors. Dealer aids, these are basically some payments to dealer, or sometimes we may have some asset at dealer place. So accordingly, we'll make an assumption while doing the solution. Transit insurance, insurance expenses. Trade expenses are also expenses. Distribution freight. Distribution freight means what? Distribution freight means whenever we have dispatched, or whenever we have given some goods supplied to customers or to dealers, we have incurred freight. Basically, outward freight expenses. So that we'll consider. Debenture interest. Now, whenever you get this term interest, debenture interest, or interest on loan, please check if there is a hidden adjustment. Sir, what is the meaning of this hidden adjustment? Debenture interest is my expense. Correct? Debenture interest is my expense. Now, here I have something called as 11% debentures, 5 lakhs. 11% debentures, 5 lakhs. What is my debenture interest? 55,000. Now tell me, what should be my expense at 11% on 5 lakhs? 5 lakhs into 11% if I do, it should be 55,000 expense. Is 55,000 expense considered? 55,000 expense is fully considered. If 55,000 of expense was not considered, then there could be a possibility of outstanding interest. Meaning to say, we have to provide for that particular item. Okay, so note this point. Whenever there is a debenture interest, check for hidden adjustment. Then you have equity share capital of 10 each. You have debenture, bank loans 6,45,000, trade payables 281, sales 4268, rent received 46,000. This is our income. We will show it as other income. See, primarily it looks like, sale of goods to be our operating revenue. So rent income and any other income items, let's say transfer fees. So they have collected some amount towards transfer fees. That also is other income. P&L account. Sir, what is this P&L account doing in the trial balance? See, this P&L account in trial balance is basically over the past so many years, whatever profits the company has earned and which they have not distributed as dividend is shown as P&L account balance. Okay, so this profit and loss account balance is basically an amount which is a part of reserves and surplus. Okay, it's a part of reserves and surplus, and these reserves and surplus or P&L balance belongs to shareholders. Okay. Depreciation provision on machinery 1,46,000. Now, here if you see, we had plant and machinery 8,60,000. Depreciation provision on machinery 1,46,000. Sir, what is the meaning of this? The debit side of plant and machinery is basically the gross block, and the credit side of the machine, depreciation part represents accumulated depreciation on the machinery item. Okay, so that is 1,46,000. Now, when we present this in the balance sheet, what we will do? We will take the plant and machinery 8,60,000 minus provision for depreciation, that is 1,46,000. Now, coming to the adjustment, they have only one adjustment. Closing inventory is what they have given. That is what we will consider. Okay. Now, this is the printed solution. Okay, we will be solving the entire question separately, not to worry. Now, what you have to do is about a page. Always I tell about a page, not about a page, one full page. One full page you will leave for balance sheet. First, we will prepare the balance sheet. Okay. Then we'll leave one full page for your P&L item. After that, we'll have placeholders for our, what do you call this, notes to accounts. I already have a format which I have already pasted here. For you, initially, you should start writing. You should start writing so that you remember. Okay. So this is the one page for balance sheet, one page for P&L, and then notes to financial statement. After this, we will do working notes. Okay. After that, only we will do working notes. Maybe a couple of pages, that should be sufficient, right? Now, in this particular question, if you see, they have given us depreciation provision, but they have not given us depreciation provision for other assets. Only for machinery they have given. And the second thing is, they have not given depreciation as an expense here. So what do we do? If information is not given, assume that it is 0 and just move on. Okay. Don't assume we need to provide depreciation on, let us say, tools and equipment, or we need to provide depreciation on land. Land is not depreciable. So we will not provide depreciation there. Okay. On fixtures, we need to provide. See, they have not given us the information. If they have not given us the information, with whatever information that is available, we will prepare the P&L and balance sheet. All right. Then, these are the various head of expenses where we will classify all the expenditure. So that classification is important. If any expense head is not there, for example, if expense related to depreciation and amortization is not given in trial balance, no need to write this item. No need to write that item. You can simply ignore that. In my format, I am showing the entire P&L and entire balance sheet. You in your solution will show only those that are relevant. Okay, so that is one more thing. Then, when it comes to order, okay, when it comes to order meaning should be present P&L first, balance sheet first, notes account first. Here, just a second. Yeah. If you are comfortable, balance sheet, P&L, and then followed by notes to financial statement and then working note. No, sir, I need working notes to be done first because only then I'll get comfort. Then you can have working notes in the beginning. Okay. Going further from, after we do 2 or 3 questions, what we will do is the moment there are some items, let us say, items of, let us say, share capital, and if there are no other adjustment, the moment you see share capital, we will directly plot it in the notes to financial statement and the balance sheet so that we don't waste time. But that you should do once you have some amount of comfort. Okay. So having understood this, let us start. Just give me a moment. Okay. So having understood this, let us start. Now, when we start, we have inventory. The first item is inventory. And please note, before completing the P&L, we cannot complete the balance sheet. So, as and when we see items, we'll start posting one by one. Inventory, where does this inventory come? This inventory, which is the opening stock, will appear in changes of inventories in the P&L. And second, the closing inventory come in the balance sheet. So, inventory is 680 and additional information 823 is the closing inventory. What did I tell you? Opening inventory minus closing inventory. So opening inventory is 680, closing inventory is 823. 680 minus 823, when I do, I get minus 1,43,000. That is changes in inventory. Where do we plot it? Changes in inventory in the P&L. Here you can see changes in inventories of finished goods. No need to write this WIP and stock in trade. How much is that? 1,43,000. So you can directly post it here. Minus 1,43,000. Please remember, expense item and we are putting a negative item. And our standard formula is opening stock minus closing stock. So that you don't forget. Okay. If required, note it down in your adjustment list. So that is the first thing. And second thing, we know that this closing inventory of 8,23,000, where do we show that? We'll show it in the balance sheet. So in the balance sheet, under current assets, you have this item called inventories, which is 8,23,000. Okay. So how do we handle this in the exam? You have simply say, you just write non-current liabilities, leave 2-3 lines, shareholders fund 2-3 lines, non-current assets 4 lines, 5 lines, and then you start plotting them. Okay. Then furniture. Now, when we have furniture, we also need to ensure we consider other items of fixed asset as well. So we have furniture 2 lakhs. Then this is one item of PPE. So I'll just write here PPE. We'll consider it later. Then we have discount. Discount is what? An expense. How much? 40,000. So discount of 40,000. Where we will show? We will show this under other expenses. See, as far as Schedule 3 financial statements are concerned, you just need to be clear about where to show which item. Once you are clear with that, there will be no problem in solving the questions in the examination. All right. So 40,000 of discount, other expenses. So under other expenses we will have, and for this we need a note. So this is other expenses. Similarly, other expenses will combine and prepare a note. All right. Then we have loan to directors, advertisement, other expenses, bad debt, other expenses, commission, other expenses, material consumed. This material consumed, we have a specific place in the P&L, which is 23,19,000. So under P&L, material consumed, what is the amount? 23,19,000. 23 lakhs 19,000 is the cost of material consumed that is directly given to us. Okay, then so this is also done. Then plant and machinery rental is other expenses. Then this current account is again our bank balance, cash balance, interest on bank loan. What is this interest on bank loan? Finance expense. And here we had debenture interest, which is also a finance expenses. Preliminary expenses, other expenses, fixtures, PPE, wages, employee benefits, consumables, freehold land, tools, goodwill. Consumables is other expenses. Freehold land is our PPE. Tools and equipment, PPE. Goodwill, intangible asset. Trade receivable will show under trade receivable. Dealer aids, other expenses. Transit insurance, other expenses. Trade expenses, other expenses. So these are all the items of expenses. Then coming to income items, we have income items of this is not income, not income, not income, not income. Sales is an income, rent received is an income, transfer fees is an income. So we can plot these items as income items. Okay. In the balance sheet, what all items will come? On the equity and liability side, have a look. Share capital, this will go to share capital. 11% debentures will go to loan. Bank loans, again loan. Trade payables under trade payables. P&L account under reserves and surplus. Depreciation provision will be knocked off here. So when we start, equity shares 25 lakhs. Share capital, always remember we'll have a note number. How much is the share capital? Shares of 10 each, 25 lakhs. So share capital you will have 25 lakhs. You will plot it here. Okay. This being the first question, maybe you are finding it slightly confusing, but as and when we follow this process of plotting the numbers in the financial statements, you will be much more easy. You'll find it much more easier to plot the numbers. So share capital, note number 1, 25 lakhs. Now in the note number 1, you have share capital. Now as far as share capital related disclosures are concerned, you have to disclose authorized, issued and paid up capital. Now the question does not mention about how much is authorized, how much is issued, how much is paid up. We'll assume everything is authorized, issued and paid up only. So what is the number? The number is 25 lakhs and 10 each. So what we'll say is authorized, issued, and paid up. Okay, authorized, issued and paid up. How many? Total amount is 25 lakhs. This I know. We also need to disclose number of shares and amount per share. So if amount per share is 10 and I have 25 lakhs of share capital, can I say it is 2,50,000 equity shares of rupees 10 each, 25 lakhs? That's it. This much you write, you'll get half to 1 mark. Okay. This much if you write, you'll get half to 1 mark. So share capital is done. So once you're done with that item, what do? We simply put a tick over here or just before the header. Okay. So this is done. Then second item in the balance sheet is reserves and surplus. For this, we will have note number 2. Now, sir, what all are included in reserves and surplus? What are these reserves and surplus? Reserves and surplus are basically the items of profit and loss account balance which we have not yet distributed to shareholders. So you'll have opening balance of P&L and you will have profit earned during the period. That's the first thing. Second thing under reserves and surplus that you'll have is all other types of reserves, like we say something called as general reserve. You would have learned about debenture redemption reserve. You have learned about preference share, when we redeem that, we get capital redemption reserve. You have learned about securities premium. All of these items are items of reserves and surplus. Now in this question, what do we have? We have only profit and loss account balance. So in note number 2, you will have something called as reserves and surplus. Do we have securities premium? No. So what we will say, we will have opening balance of profit and loss. That is given to us in the question, right? How much is that? Opening balance of profit and loss is 1,39,000. So this we have considered. I think we'll get confused here. So what I'll do is I'll put a auditor type tick. Okay. Equity shares I have considered. This also I have considered. Profit and loss account I have considered 1,39,000. So in the opening balance, we'll have 1,39,000. To this, we will add profit for the year, or if there is a loss, we will reduce the loss for the year. Do we know? We don't know currently, so leave some space. Okay. Then, so we are done with P&L account also. Okay. After that, we have debentures and loans. Now, if you see, share capital is done, reserves is done. This is not required. This is not required. Coming to non-current liability. Now, sir, how do we know whether it is current liability or non-current liability? Generally, debentures and loans are non-current unless the question mentions otherwise. Okay, that is, you can make an assumption. If there is a debenture, assume it is a long-term thing only, non-current. If there is a bank loan, it is a long-term thing. But if they say working capital loan, that is short-term. If they say overdraft, that is short-term. Maybe you can make a note. Overdraft and working capital loans are generally short-term. Term loans, debentures, bonds, these are generally long-term. So, under long-term non-current liabilities, the first item, long-term borrowings, we will plot. For this, we will have note number 3. So, coming to note number 3, long-term borrowings. Long-term borrowings. What do we have in long-term borrowings? One, we have 11% debentures. 11% debentures. Second, we have bank loans. And is there any other information about all of these in the adjustment? No other adjustment. So that's it. 11% debenture, how much? 5 lakhs. 5 lakhs and bank loan 6,45,000. So 11% debenture 5 lakhs and bank loans 6,45,000. So 5 lakhs plus 6,45,000, we get 11,45,000. Immediately posted in the balance sheet as 11,45,000. All right. Then we have trade payables 2,81,000. For trade payables and trade receivable, we have a direct entry. Trade payables 2,81,000. So this is also done. Then we have sales, rent received, transfer fees. All of these are P&L related items. So we'll post it in the P&L. I hope it is clear so far. So what did we do? We took the credit items. What all credit items we can post it in the balance sheet, we have posted. Then we will move to the P&L subsequently. All right. Then let's move to the debit sides now. On the debit side, changes in inventory we have already considered. This is already done. Then let us target the next item, the first item on the balance sheet, which is property, plant and equipment. So we have furniture 1, then any other property, plant and machinery 2, then fixtures 3, then freehold land 4, tools and equipment 5. Yeah. So we have 5 items in property, plant and equipment, and for one of those items we have this provision for depreciation as well. Okay. Now when we present this in the balance sheet, we'll have a note for this as well. So we are done with the liability side. Now come to the asset side. PPE and intangible asset. First item is property, plant and equipment. Now for this property, plant and equipment, we have a note number 4. Okay. So let us write down note number 4. In note number 4, we will capture property, plant and equipment. If there are 1 or 2 items, you can present it in one by one each item. If there are 4 or 5 items, you can do a table also. So what we'll do is property, plant and equipment. What is the PPE? What is the gross block? Gross block is basically the cost or the total amount that is shown on the debit side. Accumulated depreciation and carrying amount. Okay. So in accounting standard 10, we understand, right, what is the meaning of cost or what is the meaning of revalued amount. That is shown under gross block. What are the items of PPE? There are 5 items. So we had furniture, plant and machinery, fixture, freehold land, tools and equipment. So here you will have furniture. Second, plant and machinery. Third, land. Fourth, tools and equipment. And fifth, plant and machinery, tools and equipment. Fifth was fixture. Okay. Gross amount. Now, what is the gross amount of each one of them? Furniture 2 lakhs, plant and machinery 8 lakh 60,000. So, furniture 2 lakhs, plant and machinery 8 lakh 60,000. Fixtures 3 lakhs 15 lakh 46, 3 lakhs 15 lakhs 46 and 2 lakh 45. 3, 15, 46, 245. 3 lakhs 15 lakhs 46,000 and 2 lakhs 45,000. Okay. Now here the accumulated depreciation number is given in the trial balance, which means depreciation entry is already passed. Okay. And there are no other adjustment. However, if depreciation entry is not passed, in this case depreciation entry we will assume it's already passed because there is no further information. But if depreciation entry is not passed, then what do? We will take the accumulated depreciation given in the trial balance. To that we will also add current year depreciation. Okay. Now in this case there is only depreciation for machinery, which is 1 lakh 60. So we have also considered this, 1 lakh 46. So here we will have under plant and machinery we will reduce 1 lakh 46,000. So what is the carrying amount? Furniture 2 lakhs. 860 minus 1 lakh 46,000. We have 7 lakh 14,000. Land. Oh, I wrote opposite. Don't make that mistake. Okay. This is 3 lakhs. And that is 15 lakhs 46,000. See, my balance sheet would have still tallied. My balance sheet would have still tallied even though I made this mistake. Okay. Because total doesn't change. I again wrote ulta. Land is 15 lakh 46,000 and equipment is 3 lakhs. So the thing is, when I'm talking, when I'm writing, sometimes, mind is not there. Mind is about what I'm trying to communicate it to you. So 1546 remains 1546 here. 15 lakhs 46,000. Equipment is 3 lakhs. And fixtures are 2 lakhs 45,000. So 2 lakhs plus 7 lakh 14,000 plus 15 lakh 46,000 plus 5 lakh 45,000, that is 30 lakhs 5,000. 30 lakhs 5,000. Alright. Any questions? I hope you have no questions. Wherever you feel, sir, this point I can miss or I would have forgotten, make it in your list. Add it to your list. Now, where do we show this 30 lakhs 5,000? This will go to the balance sheet against note number 4, which is here. 30 lakhs 5,000. Okay. So we have taken, or we have already considered inventory, we have considered furniture, we have considered plant and machinery, we have considered fixtures, we have considered freehold land and tools and equipment. Then we have this thing called goodwill. What is goodwill? Goodwill is an intangible asset. So this also will plot it. How much is the amount? 2,65,000. So in the balance sheet, after property, plant and equipment, intangible assets, we have 2,65,000. Now here, though we have only one item, but what is that item? Goodwill. It is not, it is an intangible asset. We have to give the breakup of intangible asset. So you can write it as note number 5. Or because there is only one item, if you want to save time, you can write goodwill here also. Okay. Typically, marks will not be deducted if there is only one item. So note number 5, if you write, you will make it 2,65,000 under goodwill, or you can directly write goodwill here also. That is also acceptable. Okay. So right now we'll add it here only. Then there are no capital work in progress, no intangible asset under development, no other investment, no DTA, no advances long-term basis given, no other non-current assets. So generally, these items you will not see. Sometimes you may see deferred tax asset, but other than that, you will not see other items. Right. Then, coming to other balance sheet items, what are we left with? Loan to directors. Oh, we have loan to directors 80,000. Now, sir, whether it is short-term loan or long-term loan, and second thing is it's on the debit side, so it's an asset. Now, whether it is short-term or long-term, you can make any assumption you want to make. Okay, that is fully up to you. Then we'll right now treat this as short-term. Then what are the other asset items left? Current and cash account. So current account 45,000, cash account 8,000. These are cash and cash equivalents. So we have in the balance sheet here cash and cash equivalents. For this we need a note. Okay. Inventories, there is no breakup required, so no note is required here. Trade receivables also no note is required because it's a single item. Cash and cash equivalent, then we'll have note number 5. See, if you get sometimes confused that my note sequencing may not be correct, what you can do is prepare all the notes. Later you can do juggling of that. That's also okay. Cash and cash equivalent. So here we have cash in hand and balances with bank. Now, one disclaimer here. ICAI has some questions where they have mentioned balances with scheduled banks separately. As per the Companies Act, current Companies Act, there is no such requirement. Earlier, we used to have a requirement with balances with scheduled banks separately and other than scheduled banks separately. That used to be there. Currently, we don't have any such requirement. Okay. So, if the question mentions that there is some balance with the scheduled bank, you can disclose it separately, no problem. Extra disclosure is not a problem. Okay. So, cash in hand is how much? Cash in hand is 8,000. Cash at bank is 45,000. So 8,000 plus 45,000. 8,000 plus 45,000. We get how much? 45 plus 550, 53,000. Cash and cash equivalent, plot it immediately. How much? 53,000. Okay. Then we have trade receivables 4,40,000, no other adjustment. So that also will plot it. Trade receivables, how much? 4,40,000. Plot it. Then all of these are items of expenses. So are we left with any other asset? We are left with one asset called loan to directors. Where do we show this? Now, as I told you, it can be short term, it can be long term. You can assume anything. Typically, we'll assume it to be short term only. 80,000 loan to directors. So under short term loans and advances, note number 6, 80,000. And we'll write note number 6. Short term loans and advances. Loans to director. How much? 80,000. Sir, why are you presenting it separately? See, there are two things. One, we need to give the breakup of short term loans and advances. Second, whenever there is a related party, you have to give a separate disclosure. Okay. So that is one more thing. So with this, loan to directors are also done. All the balance sheet items we have completed. If at all we have missed something, we can revisit that and we can add it as well. Now come to income items. So sales, rent received, transfer fees, these are the three income items, 42, 68, 46 and 10. So in the P&L you have revenue from operations. So this will be note number 7, other income note number 8. Okay. So in note number 7 we will take 42, 68 sales. Note number 7, sorry, revenue from operation sales and other income 8. So note number 7, revenue from operations sales. The amount is 4268. Time and again, if I keep going up and down, it is just wasting time. 4268. And other income. What are other income items? Other income they had given, one was rent and the second one was something called as transfer fee. Sir, how do we know this is income or expense? Arey Baba, if it is on the credit side, it is an income. Okay, so you can directly take it. So that is 46 and 10. 46,000 and 10,000, which is 56,000. So 4268 and 56,000. 4268 and 56,000. Okay. So what is the total income? 4268 plus 56,000. Total income is 43,24,000. Then cost of material consumed, it's given to us in the question. Purchase of stock in trade, they have not mentioned anything. Changes in inventory, 143, we have already computed. Now for this, if required, you can give a note also. Okay. If you want to be doubly sure or if you don't want to lose marks, you can give a note number here and you can do it opening stock minus closing stock. That is also possible. Then we have employee benefit expense. So here on the sales side, we have completed, rent received completed, transfer fees completed, depreciation provision completed, everything is done on the credit side. Now come to debit side. Under debit side, we have multiple items: discount, advertisement, bad debts, commission. So for each one of them, as we read through the amount, we will plot them in the respective schedule. Okay. So what all do we have? We have employee benefit expenses. So this will be note number 9. We have finance cost, note number 10, and we have other expenses, note number 11. So write down note number 9, employee benefit expenses. Note number 10, finance cost. And note number 11, other expenses. Okay. So each one, if you see, discount is what? Other expenses, 40,000. Advertisement, other expenses, 20,000. So 40 and 20, bad debt 35. 40, 20, 35. Don't do this in the exam. Please keep on referring to the question paper and writing it. 40,000, 20,000. See, I also sometimes forget. So bad debt is 35,000. 40,000, 20,000, 35,000 is bad debt. 35,000 is bad debt. What was 40,000? 40,000 was discount. Okay. Then 35,000 is bad debt. 20,000 was advertisement. So 3 items are done. Then commission 1,20,000. Plot it separately. Rentals 25,000. Commission 120, rental 25. So here we have commission 120, 120, and rental. Rental is how much? 25,000. Then material consumed we have already posted. Rental is already posted. Current account, bank account is done. Interest on bank loan. Where will we take this 1,16,000? Under finance cost. Along with interest on bank loan, we remember there is debenture interest also 55,000. So 116 and 55. Under finance cost, you will have interest on bank loan. How much? 116. And debenture interest. For debenture interest, please keep in mind there could be a hidden adjustment that you have to consider. So 116 plus 55, how much is this? 1,71,000. This immediately posted in the P&L so that you don't forget. 1,71,000. Okay. So interest on bank loan is done and your debenture interest is also done. Then we have preliminary expenses 10,000. This is also other expenses. Then we have wages 9 lakhs. So preliminary expenses 10,000, wages 9 lakhs. Preliminary expenses 10,000, wages 9 lakhs. Okay. Then after that, what do we have? We are done with preliminary expenses, we are done with wages. Consumables 84,000, other expenses. And dealer aids 21,000, 84 and 21. So let us plot that. 84 and 21. 84,000 and 21,000. 84 was consumables. This is dealer aid 21,000. Okay, so dealer aid is done and consumables also it is done. Then we have transit insurance, trade expenses, freight 30, 37, 54. 30, 37 and 54,000. What is this 30, 37, 54,000? I'll just refer to my other note here. So 30 is insurance. 30 is insurance. Then 37 is trade expenses. And then we have freight of 54,000. See, even after leaving 2 pages, some space is not sufficient. So safer side, leave 1 more page. Okay. In the examination, you are paying exam fees. Make full use of the exam fees. Okay. Don't worry about sir, paper waste, this space, nothing will happen. Okay. If it is an extra space, strike off towards the end. So what is the total? Total is 40,000 plus 20,000 plus 35,000 plus 1,20,000 plus 25,000 plus 10,000. 10 only, no preliminary expenses, yes. Plus 84,000 plus 21,000 plus 30,000 plus 37,000 plus 54,000. So total is 4,76,000. Total is 4,76,000. This 4,76,000 will plot it here. Where? Here. 4,76,000. Note number 9, employee benefit expense is how much? Employee benefit expense is 9 lakhs. So that also will post it here. Alright. Now, after we are done with this, just a quick have a look at the question once, initial time, right? So see if there is anything we might have missed or we have not put a tick like this. Either follow this single tick and double tick for 2 adjustment and ensure all the items are ticked. So once all the items are ticked, there is only 1 adjustment here that is also ticked. So no need to worry. Okay. So let us do the P&L first now. Total of expenses 2319,000 minus, very very important, changes in inventory is negative. So minus 143,000 plus 9 lakhs plus 1,71,000 plus 4,76,000. We get 37,23,000. 37,23,000. Now, if the question does not have anything on exceptional, extraordinary items, the continuing operation, discontinuing operation, no need to write all of this. Okay, directly we can say profit before tax. Now in this question, there is not even taxing expenses. So directly we can say profit or loss for the period. If tax item is there, we'll first compute profit before tax and then we will show profit after tax. Generally, we don't see questions having continuing, discontinuing operations related breakup. So directly 4324 minus 3723. 4324 minus 3723. How much is this? 601. 601000. This is the profit for the period. Okay. Now this profit for the period we will do transfer to reserves and surplus. So come to reserves and surplus. Add profit for the year. How much is that? 6,01,000. So 6,01,000 plus 1,39,000, we get 7,40,000. 7,40,000. In the reserves and surplus section, here you will write note number 2, 7,40,000. All right. Now, we have taken all the items, so we can do the total. 25 lakhs plus 7,40,000 plus 11,45,000 plus 2,81,000. Total we get 46,66,000. 46,66,000. And 305,000 plus 2,65,000 plus 8,23,000 plus 4,40,000 plus 53,000 plus 80,000, 46,66. Okay, so we can just cross check once with the solution that I have printed one. So yeah, 4666 and profit is 601. So in the in your solution book that you're having, you just need to write these items. That's it. No need to write the full P&L. Even in the balance sheet, okay, wherever items are not there, like for example, you have only PP and intangible asset, just write both of them. Inventory, trade receivable, cash and bank balance, short-term loan and advances. Just write. No need to write the full balance sheet. You will not get extra marks. Okay. So that is how we approach a question on preparation of financial statement. This was one question, one example for you to showcase how we solve questions. Okay, this is the basic thing. Now, in the next class that we take up, there will be picking up 2 more questions, and there we will move slightly faster, more from an examination point of view.